Well, good morning, everyone. Welcome to our Thursday morning trading session. Hang on here 1 second. I'll get the screen share going on. Okay. All right, here we are. Kind of a soft start to the day. A little bit of a gap up. Yesterday's session, a little bit choppy, although we did put in a little bit of a rally, so there were some buying opportunities there. But for the most part, the market was range bound, giving us a breakout very late in the day. And here was the retest, and it was really too late to do anything with that, at least from a day trading point of view. A slight rally up in the overnight, and we find ourselves with a little bit of an opening gap here to start the day. Here looks like the Raptor giving us a very early signal right out of the gate, producing a hard edge buy. Only a couple of minutes into the session, so it's up to you, how early you want to get going. A lot of times I like to wait for the market to settle in, but it is a valid signal. So you could look at taking that. This one has a decent opportunity in that you can cover it 2 swings back and below the hard edge, and the risk amount is actually fairly reasonable. This would kind of coincide with our first eagle signal of the day type strategy, where you're looking to take advantage of that first move that the market might be making. Oh, and it looks like this one may actually have a little bit of follow through to it. Let's see if we can sneak up there to the profit target. Like I said, a lot of times I like to let the market kind of settle in a little bit. Oh, and here you can see why. There's a lot of times I've written in my journal, don't trade too early. And you're going to see here in a second, they're going to try to run my stops. Maybe I caught a break here off the lows. but I don't think so. All right, let's put this on the shelf here for the moment. Oh yeah, you can see we're starting to get a first micro-macro cross lower. We are into the hard edge, so a lot of times we can anticipate some sort of reaction as we encounter the hard edge. Oh dear, here they come. I think they're going to give me a whack. I've been watching the Geiger counter here, and it was pulling hard over to the short side. Now, alternatively, I could have tried to cover the trade below the opening gap, which would have put my stops somewhere below the median line. Dug a little bit of a hole for myself here. And one more time in my trading journal, I have to write, you entered the trade too early. All right, enough of that. I think the first macro cross had enough in it to find its profit target. That would be this signal right here. Came shortly after the open. That signal right there, the first macro cross, occurring when everything is in sync. First signal after the macro line cross, everything comes into sync. You produce a signal, and there you go. Hit your little scalp target. Scalping might be the way to go, given that the market seems to have a sideways bent to it lately. Haven't really seen a reaction to the hard edge yet. That's a little unusual. the Raptor cloud's starting to turn over. We're back into the support zone on the median line. And the market starting to take on a more bearish flavor. All right, a little bit of buying in response to the hard edge. Looks like the buyers are going to give it a go. Or not. We're trading in slow motion. I think it was Peter who the other day said it's like running in the mud. And that's exactly what this seems like. Okay, so we have got a retrace here. We've got the clouds crossing over. Now we'll see whether or not the market responds and heads back lower, tries to recover this new downtrend that they've got going, or whether they're going to try to resume the uptrend from yesterday. If there is a bounce here and prices head a little bit lower, we should produce a number one signal. Yeah, Mark says it's sort of like wrestling jello. Actually, it might have been you, Mark, who said we're running in the mud. Okay, a little bit of an uptick. The most difficult part here is just going to be waiting them out. The hawk producing another sell signal here on that first micro macro cross lower, or sorry, I'm getting ahead of myself. A green bar sell lower, which you don't need to take, because if it works out, we're going to get a first micro macro cross higher. If you do believe that the market may be heading higher from here, of course, you can always buy the failure of the green bar sell. So I suppose in essence you could bracket this trade also. That would be interesting. I haven't done that one before. All right, so let's see what they do. Didn't want to go up. Do they want to go down? Nope, not yet. All right, well, let's put that one the shelf. All right, well, they're thinking about it. Look at our Geiger counter here. Look at all those little peaks, flurries of buying that resulted in this little uptick. Oh, here comes another one. Looks like they're trying to lay it on. The bulls are. Of course, if you see this happen in your Geiger counter, if you see a lot of bullishness and then all of a sudden there's no follow through, well, that should make you a little bit more bearish. That tells you that the sellers are picking up all those buy orders and the market may in fact head the other direction. Yeah, it hasn't started raining here yet, Jeff. Jeff says, just noticed it's raining outside here in the Pacific Northwest. 32 days of no rain has ended. And rain in the forecast for us today, but so far it's still just scattered cloud. But yeah, it would be welcome. A little bit of moisture. I didn't water the flowers last night in anticipation of the rain. So if it doesn't rain, I'm going to have to get out there. All right, here they come. Now, you know, I could try to run this one out, or perhaps extend my profit target, or what I could do is I could even cancel one of these, and I can manually enter a profit-taking order. This will allow me to take profit on one and leave the other one in as a runner. If they head lower. Hey, look at all these yellow bars. Look at where they're printing. Right here around the whole 59, 24, 25 area. Because there is room for them to move if they can get down below the lows of the morning, of course. No other signals yet. Okay, depending how strictly you want to interpret this, you might consider this to be a cloud crossover signal. It's not going to print as a cloud crossover because, of course, our clouds got mixed up here again, and the market, or the cloud's starting to twist up like a rope, really giving a sideways flavor to it. But it has the makings of a cloud crossover. And it's important to be able to recognize these things apart from the programming. Now, this is not an ideal trade, right? I can show you this trade here in the room, but it's far from an ideal setup. We do have an opportunity for a second push on the entry, so the signal has printed. We've seen the market retreat from the signal. So I've entered my order a tick or two below the current low. But if you're looking for a strong signal, that ain't it. Well, they're still struggling, still trying to sort things out. I suppose I can bring my stops in a little bit. I was going to hold them back, but I can probably bring them in right there. Take a little bit of risk out of the equation. After all, if the market turns here again, then we've seen a test of the extreme, in this case the low, and the market should try to rally from there. I'm going to close out that Raptor trade. Like I said, it's hardly ideal. struggling. The market is just very happy where it is right now. It's annoying for us to try to trade, but this is what a happy market looks like. Traders are pretty confident that 59.22 is a fair price for the NASDAQ. Oh my goodness, I don't believe it. I hit my profit target. Okay, now if I'm actually able to ride out this swing without getting tapped at break even, there is a chance that we could maybe trade, well, maybe down toward the low of the morning, or yesterday's lows. Come on. So we're at this morning's lows now. Right, here are the lows of the morning. We're testing that. Oh, actually not bad. Got a little bit of open profit there. Let's see if we can't break through. All right, so we've got a new low on the day. Hmm. We're getting a little bit of a reaction here. There's my parabolics. Come on, give me one more leg lower. Let's go. There we go. That's a good market. There we go. Come on, keep going. let's see. Oh, we're into the primary support zone. After that, we're down here to 59.04 half. So that's probably going to be a pretty big move if we can see that. So I'll look around 59.05. And I will buy back my other order if we can get down there. Come on. Come on. You can do it. This makes me wish I had doubled up on that Raptor order. That very rough looking cloud crossover right here. You can see it had the elements of a market trying to change trend. The momentum shifted when our clouds did. There was the pullback to try to recover the uptrend, and then it came back with a sell signal. So even though it wasn't textbook, it did have all the elements, all the makings of a proper cloud crossover. Come on, don't stop now. We're only a couple of ticks away. You can do it. So close. So close to my profit target. Didn't quite get it, but that's okay. Ran a relatively tight stop loss, so still took a pretty good chunk out of that one. Hooray for us. Hooray. All right. Now we're back in our holding pattern. think it's fairly safe to say we've got a downtrending market today. If you can call this a trend. So the market moving higher now, back toward the hard edge. Might get a hard edge bounce. You can see here the hawk already giving us a macro pullback signal. Here we go. Here's the rally. Stand back. Oh, thank goodness David has a question to break the monotony of watching this market drag along. David says here about the Falcon filter. He asks, Eric, on the Falcon filter screen, I see an up arrow type indicator with no number below it. Are the numbered indicators just a feature of the Raptor suite? I'm not entirely sure what it is you're spying here, David. It may just be that you're misseeing something, but yeah, the prompts are unique to the Raptor. And here's something I discovered the other day as well. You know how sometimes if the market is moving quickly or we're just not paying attention, you don't always notice the pre-signal? Well, what I've noticed is that the background highlight will start to print. Now, right now, the background highlight is very faint, but you can make it darker. So if you go to your Raptor version 2.0 and you pull down here to the very bottom, you'll see the background opacity tab. Right now it's set at 2, but if you make it a little bit darker, let's say we'll try a 4. Okay, so it's a little bit more visible, and what you will see happen is as the signal is printing, before you get the number prompt, you will actually get the background highlight. And that's kind of in sync with the pre-signal. The pre-signal and the background highlight are going to develop at the same time. But like I said, if you're like me and you're not always paying attention, or you're following too many things at once, that's what it is. My attention is divided. It's not that I'm paying attention, it's that my attention is divided. But it's another visual cue that tells you, hey, something's going on here, pay attention. If anyone else has any questions, please feel free to ask. It's going to be a little while. We're getting a pullback here. You can see we're almost back to the trend line that I drew. And we might see a reaction as the market gets back up there. It's a little early to call this a bullish push, but that is what we're seeing. Yeah, good question here. David asks, being new to the futures market, he wants to know, do futures, as is so typical of the U.S. equity markets at this time of the year, demonstrate a bit of a seasonal lull with major market participants on vacation or the like? Yes, most definitely. I don't know if it's the lack of economic news or just that, as you said, the big boys are out of town. pegged the trend line to the tick, came back here on the Raptor. We finally produced our number one signal, cloud crossover, made a charge back to the lows where everything promptly stalled again. Was there enough in there to at least get the profit target? Oh, hooray. So looks like all the sellers were waiting at that trend line to get on board. And now they slipped down below and hit the secondary support zone. That was my profit objective. But I would not have been able to ride out this much of a swing. And we're getting a little bit of a reaction now on the number. And that is a pretty strong bullish push. The buyer's trying to fight it back here. The Geiger counter pulling over to the long side, the buy side. But so far, it looks like it's all bears today. Jake's asking, what does the red dot on the Raptor mean? This is our warning dot. This tells us that some of the signal parameters are being met. When all the signal parameters are met, we produce a triangle and a hash mark. That tells us that we have a completed signal. The higher probability signals will also be matched with a number prompt. So these are what you might consider secondary signals. And if the market conditions are right, I'll take a secondary signal, but for the most part, I stick to the high probability setups as much as I can. They're really liking this 59.04 zone. Tagged it a couple, 3 times now. 1, 2, 3. Oh, we're getting a little bit of a breakthrough. All right, David, full of good questions here this morning. David asked, Eric, what's the ratio of underlying market principles, I think you mean participants, institutions, which are primary stakeholders in the underlying notional commodity, like gas companies, commercial grain buyers, currency, clearing banks, etc., versus pure speculators who will never originate or want to take possession of the underlying commodity at contract maturity. Well, David, what you are talking about is the Commitment of Traders report. And every week on Tuesday, the Commodity Futures Trading Commission releases the Commitments of Traders report, and it looks like this, and let's see what this looks like. You can pull reports for all kinds of commodities that you're interested in. Let's say we're going to look at agricultural commodities. There is your commitments of traders report for wheat. It shows you the producers and swap dealers. These are the commercial guys. The managed money are the funds that trade. And the other reportables, those are you and I. Now, usually they will do some sort of let's see. They'll give you a chart. All right, they're not. We'll check out. Okay, usually you can get a chart that looks something like this. Here we go. Bar chart. Okay, I knew it was on their website somewhere. I couldn't find it. Here's another one. This is what it's going to look like. And let me try to make this a little bit bigger for you. All right, so you've got the large speculators. Those are the funds. The commercials, which are the people who are actually going to take physical delivery of the commodity in question, those are represented by the red line, and the blue line, those are you and I, just the pikers, if you will. So you can see that for the most part, the large funds are taking the opposite side of the trade of the commercial interest. So the funds are buyers, they're net long, the commercials are net short. You need to remember that they have different incentives for buying and selling, and they do things differently. You know, the funds will try to buy it up, hoping prices will go up. The commercials sometimes have a longer point of view. They're hedging. This one down here is what they call the disaggregated report, and it just splits it up a little bit more. It shows you the commercials, the swap dealers, which are also commercials, and then it shows you the managed money, which are the funds, same as a green line here, and then the other, which is you and I. So there's kind of a roundabout way of answering your question. Oops. We're usually on the other side of a commercial interest, whether it be like if we're trading the stock indices, we're probably taking the other side of the trade of Goldman Sachs, Bank of America, somebody like that. It's very, very rare that you would take the other side of my trade, or I would take the other side of your trade. Okay, we've had a couple soft edge buy opportunities. We're getting another one here. I'm getting it a little bit late, but I am getting a second push. The target for the soft edge buy, of course, is the hard edge of the trading band. Oh, by the way, if you're ever bored, the CFTC website is just loaded with information about the markets. There's analysis, all kinds of stuff. If you're having trouble sleeping, this is a great website to visit. But a lot of technical stuff in there, a lot of useful stuff actually. That last chart, David, it's actually a commitment. It's from the Commitment of Traders website, but I got this from Bar Chart. So if you go to the Bar Chart website, they've got all kinds of very useful information, and you can search commitment of traders. No, that's not what I wanted. All right, let's do it the Google way. Commitment traders bar chart. There we go. And then you have a whole slew of different markets that you can follow. Okay, took the buy signal here, the soft edge buy, looking for a little bit of a move higher here, perhaps back to the trend. Oh, we have moved back to the trend line. Okay, forget that. we're already back to the trend line. Let's see what kind of trend line we have here on the Raptor. So there's the open. There we go. Would have been nice to grab that one from down there, wouldn't it? Russell asks, what do you suspect gave the market such a rush in activity? You know, Russell, that's a really tough question. If you want the bare truth answer, and this isn't conspiracy theory or anything like that, but the market makers bought the market up. That's really all it is. The news people, MSNBC and all these people are going to be running around trying to find some news item to match the market moving down today and the market moving up today. I've said this before, but the problem with the news is that reporters see the world through a news filter. To them, there's always a cause and effect relationship. The market went down because. The market went up because. And, on the surface, that makes sense, right? Market went down today because crude oil prices went down. So, what does crude oil have to do with the NASDAQ? NASDAQ are mostly tech stocks. Why should they care about the price of crude? Oh, well, because the price of crude affects the overall economy, and blah, blah, blah. Price of crude goes down because there's more selling. People who own crude are shorting it. They're offloading their crude. That's why crude went down. There's a glut of supply. Or there's not enough demand. Everybody's driving a Tesla now. So, trying to find that cause and effect relationship, as far as the markets go, it really goes up and down because what the big players are doing. If they're buying, the market will go up. If they're selling, the market will go down. Our job is to try to figure out which way the wind is blowing and get on board with them. But yeah, there's that temptation. There's always that temptation to try to link the two. And, if there was a reporter in the trading room here today, they would take exception with what I said. They would say, no, there is a cause and effect relationship. But a lot of times I'll see them scramble for some sort of reason, some sort of logic to say the market went up because this must be the reason. And there are some news events that are market driven. FOMC minutes, FOMC reports will drive the currency markets, it will drive the stock markets, it will drive the interest rate markets. WASDE reports will drive the agricultural commodities, World Agricultural Supply and Demand estimates, which come out every quarter, and traders will be waiting on those with bated breath. But very often, traders, they're a savvy bunch. They already have a feel for which way the market might be going. You know what the weather is like. You're watching the rain and the temperature, and you get weekly updates about crop conditions. Are there, is there mold? Is there fungus? Are there pests that are destroying thousands of acres of soybean or corn or wheat? Wheat and corn are essentially grasses. Corn a little bit more weather sensitive than wheat, but really once wheat is in the ground and the stalk is formed, it's pretty certain wheat's going to come to market. There's not, barring a catastrophic event, it's pretty rare that the wheat harvest doesn't come in. Now, then they start speculating on the size of the wheat harvest, and so on and so forth. We're stalling here just slightly shy of my profit target. Doggone it. Get up there. Give me those couple of ticks. come on. It'll give you a little nudge, just get you over the hump. Get up there. Oh, whew, that was hard work. Okay, well, another run up. Market's kind of neutral now. It's bounced off the lows, rallied back to the resistance at the trend line. And now the whole dance starts all over again. So things actually taking on a slightly more bullish note here. And it looks as though the clouds are starting to cross. We may get a cloud crossover out of this also. But it looks like it might be a good spot to close up the room. We had a couple of decent moves. And that may well be the move of the day, you know, that move down and this little bit of a rebound up. The market may just kind of drift sideways for the rest of this session. We'll have to see. All right, boys and girls, thanks for coming out. We'll do it again tomorrow. I will talk to you then. Bye for now.